Quinn, Deputy Director at dcraci. I'm here to help you with your housing, tax, or title problem, so give me a call anytime, and I'm happy to meet to see what we can do together.
My name is Joe Gross. I'm the Credit Clinic Director here at dcraci. I'm the one that would sit down with you, develop a budget, figure out a spending plan, pull your credit report, and see if there's any way we can improve that.
Hi, my name is Lillian Harrison, and I'm the Housing Director for dcraci. And as the Housing Director, I help people with foreclosure prevention, pre-purchase counseling, credit, and budgeting. And it's absolutely my pleasure to serve you.
Hi, my name is Anthony Dohring. I'm Delaware's free tax attorney and the director at the dcraci Low Income Tax Clinic. If you receive a notice from the IRS, please give me a call as soon as possible so I can schedule for a free consultation.
Hi, my name is Maricela Tovar Rangel, and I am responsible for doing the intake process here at dcraci. And I also manage the credit union, Stepping Stones Community Federal Credit Union, y también hablo español.
Hi, my name is Christian Tillerino. I work for DCRAF as an outreach director. I enjoy working for community and local families.
Hi, my name is Howard Keener. I'm the Director of Strategic Projects and Community Affairs for dcraci. I work on human resources, internal policies and procedures, and community development, and also marketing for dcraci.
Hello, Delaware. How are you? I'm Rashmi Rangan and delighted to spend this next hour with you, but not alone this time. So I talk up my tax clinic and I talk up your free tax attorney, Anthony Dohring. So today I have this honor and pleasure to chat with him so you get to meet him. Hey, Anthony, how are you?
Good, thank you.
How was your drive up here from Georgetown?
Nice and smooth.
Nice and smooth. Okay, so last time when I was on, as soon as I stepped out, somebody mentioned, you know what, we should do a full hour on 1099s. I said, oh, I have just the person. So, but before we get into taxes, tell us a little about you, Anthony.
My name is Anthony Dohring. I've been practicing law in Delaware since 2011. I've been working at DCRAC since 2015, and I'm a proud father of two, Ari and Nandon, and my significant other, Carly Juneau, as well. We live together down in Georgetown. We just moved down there last year. I used to coach over at the Y and Kirkwood Soccer Club. I still do help out on occasion, but more on a general manager perspective. Coach Rich and Coach Dwayne, who I believe are playing right now and hopefully winning. That's basically it.
That's it. So now taxes was not, I mean, tax clinic, you had not much experience until you started running it, right?
Yes.
So tell us some stories over the years that are interesting and stick out and make you feel so proud to be the attorney representing the clients that we represent, you know, right in front of IRS and all the way to tax court.
Yeah, prior to taking this job, I had two tax cases. I think one was divorce related, the other one was taxpayer fraud related. Then I got recruited for this job, and there's two major cases that stick out that came from our clinic. Both had changes or both affected changes in the law. One that we won, and the law unfortunately went, I feel, in the wrong direction. One that we won, and the law has gone in the right direction. The first one would have dealt with an out-of-status taxpayer who was denied his child tax credit. He had to prove that he had earned the income, and it was very difficult given the fact that, you know, citizens that are out of status have difficulty opening up checking accounts and have trouble proving they are who they are after they earn the income, and unfortunately sometimes they're taxed twice. The income is taken out of their checks, and then when the IRS gets the money or gets the return, they're like, well, thank you for playing, but we're going to disallow these withholdings, so now you have to pay again. Right. And we were able to get that individual his money back. He had 3 children, was a single father, and that $5,000, I think he earned $20,000 a year, so that $5,000 went a long way for him. And unfortunately, though, the PATH Act passed right after that, so certain individuals now in that situation will not be able to get certain credits unless their ITINs and everything is in place right at that exact same time. One little hiccup now, and you could forego, you know, at least for 1 year, forego the tax credit. The next case, the law just changed. It was a veteran. She, unfortunately, when she was overseas, she was working with a chemical that destroyed her lungs, and Senator Coons had forgiven her student loan, and unfortunately, though, the IRS didn't feel the same way, and instead of having to pay the $100,000 back over 30 years, she had to pay the $30,000 tax bill back immediately. You know, she was a single mom at the time, I believe. She may be married now, but long story short, you know, with this disability, she was having trouble working and keeping up with the bills, and Senator Coons had filed for an offer in compromise to try to get that debt relief, that IRS debt relief. The IRS declined him. He passed the case over to our clinic, and we actually won that on appeal. And then Senator Coons went even farther and then turned around and got the law put in the new Trump tax bill that basically, going forward, any taxpayer who is a veteran and their student loan is forgiven because of their service, they will not be taxed any longer. And there's actually some clinics still in Minnesota and other places that are actually struggling with this, although the law has changed because it's not retroactive. So they reached out to us for some assistance as well. But those two would probably be, you know, the top two because of the legislation that came from either one of those.
So with this one, as far as IRS is concerned, when your debt is relieved, that triggers a tax event. So a debt forgiven, it doesn't matter what debt, It could be mortgage debt that is forgiven, student loan debt that is forgiven, credit card debt that is forgiven. So debt forgiveness is treated as an income to the taxpayer. And on that income then, the taxpayer has to pay taxes. So let's assume that I had $20,000 debt forgiven. When I filed my returns, I didn't include that $20,000 forgiven debt. IRS then hits me with two penalties, right? One, it says I underreported my income, where to my mind, a forgiven debt ain't income by no stretch of imagination. But so if you are one who has any debt forgiven, remember there is a possibility that you could be pulled for a underreporter or a tax bill because you did not include that forgiven debt in your income. So thank you, Senator Coons, for this passage of legislation for a veteran whose debt was forgiven is exempt from reporting it as a income on their tax returns. And it is not retroactive, it's only moving forward. So, well, DCRAC, Low Income Tax Clinic, did get something positive moving forward. So, we see, and this is now October, so folk aren't really thinking about tax planning, but perfect time to begin exploring what they're going to do when tax day comes, although it is April 15, 2019, but much planning can be done now. So let's talk about planning that somebody who knows they'll get a 1099 on once the year ends. What is a 1099?
A 1099 is when you work, you either are a W-2, which is your 9-to-5 person, you go in and punch a clock, or 1099 if you're self-employed or work for yourself or you're a contractor for someone. So the 1099, any time, even like, for example, if you're a babysitter and you earn more than $600, technically the person paying you is supposed to issue a 1099. However, that usually doesn't happen. But so a 1099 will be issued to you if you're a contractor, and you're supposed to pay the taxes quarterly, right? So if it's your first year, that's a little bit difficult. So my recommendation would just be pay 10% of what you earned every 4 months to send the check in that way. Or if you've been in business for a while, most people just base it off of their previous year. But basically the IRS wants you to make estimated tax payments. I believe it's April 15th would be the first one, June 15th, September 15th, and January 15th. A lot of people are under the assumption that April 15th, for example, of like April 15th of 2019 is when my taxes are due. That's incorrect. That's just the date for reconciliation. Your due date is actually January 15th, so you're actually already a couple months late if you're sending that bill in. However, most Americans get, if you pay in full at that time, most Americans get off. The IRS really doesn't go looking for you because there's too many to collect from at that point. But if the number is significant enough, you know, they will send you an additional bill. And
it makes sense because when you are an employee and you receive a paycheck, what happens? You don't get the full paycheck. Yes. With every paycheck, whether you're paid weekly, bi-weekly, bi-monthly, monthly, the employer is withholding an estimated federal tax, estimated state tax, estimated city tax, estimated FICA, and matching that FICA payment, and they are withholding, and then there are, depending upon how large the employer is, they may have to pay that to the appropriate entities weekly, bi-weekly, bi-monthly, monthly, or quarterly. I remember when DCRAC had fewer employees, we used to make those estimated tax payments only once a quarter. But now that we have a larger payroll, we are paying those estimated taxes as soon as they are withheld from the employee, because we definitely don't want to run into trust fund recovery issues, which we, time permitting, will get to it. So, I mean, it does make sense. Remember, if you are an employee, get a paycheck. Your paycheck is smaller than your gross income because portions are already being withheld, and that helps you. Uncle Sam doesn't trust that at the end of the year or when tax time comes and you file your returns, that you will have money to pay the whole tax bill. So with each paycheck, they are requiring the employers to collect from you. So now if you are a small business or not an employee, but you are treated as a contractor, you have this incidental jobs, you're earning more than $600 from one particular person, you get a 1099. So you might get multiple 1099s that you have to reconcile when tax time comes. And that is where our taxpayers who don't get a paycheck run into huge problems. So who are typical people that would get a 1099, Anthony?
Taxpayers I see, truck drivers seem to get themselves in the most trouble. Construction workers,
Boiler workers.
The Boilermakers. They're a special class.
Entertainment.
Yeah.
Anyone
Yes,
in the entertainment.
yes. Entertainment. Yes, we do have a singer. Yes, now I think about it. Yeah, anybody who basically just works for themselves, and that's really. And there's different kinds of 1099s. Some people even get in trouble, for example, with their own even state refund and not disclosing it the next year because that shows up on your wage and income transcript as well. That'll be the 1099-G, or unemployment. Yeah, unemployment issues in the 1099. Gambling. Yeah, we had that. We had one issue with a client who had won a large certificate of gambling money, and didn't claim. So yeah, it's retirement, death, when they issue the life insurance out to the people who receive it, the beneficiaries. So it's a number of different ones. Okay. The most common one though with working purposes is the 1099 miss. I mean that's kind of the catch-all.
Right. So Anthony, I am not an employee. I am a contractor. I haven't even set up a business, but I pick up gigs here, gigs there, and come year end, I file a return. I can prove my income, I guess, because whoever has issued 1099s to me has sent that to the IRS or Social Security somewhere, right? So I put my income, I take my expenses, deductions. What kind of a simple return should I be filing? Should I be doing Schedule C's?
Yeah. You would file your 1040, and you would have the Schedule C, the Schedule SC for the self-employment. The software kind of generates it automatically, but if you are that sort of contractor, it should generate the 1040 with this Schedule C and the Schedule SC as well. And then you also obviously have the health care that you'll have to tackle as well. Hopefully you had insurance to the marketplace at that point. And then if you have children, things of that nature, then obviously you'll have those schedules as well.
So once I file my return, since throughout the year I didn't pay a dime in federal taxes, state taxes, city taxes, nor did I pay FICA, what kind of a tax bill could I be hit with? And are there any penalties I should worry about?
Yeah, so the average one, for example, to just keep the math simple, when you get right around to the $10,000 mark, you're looking at owing the state taxes. because although your standard deduction may be like around 6,000, you're always going to have the self-employment tax with somewhere around there is going to be like an automatic almost 1,000, like anywhere from $800 to $1,000. So right around when you get around the $10,000 mark, you're getting into, you know, having to pay. You always have to pay the self-employment tax regardless of the standard deduction, but you would have to pay, you know, the income tax for, you know, your personal. So I would say you're looking at probably the average bill for the low-income person that walks in is anywhere from 1,000 to 2,000, because those penalties, for example, are smaller when your tax debt is smaller. But the people that I see that are low income that get in huge, these like 10, 20 grand bills, are the ones that pull from their retirement. For example, like they were W-2 employees their whole life, didn't really ever know what a 1099 was. Then they go to retire, and their retirement company says, oh, well, here, take this 10%, this is all you need to pay. And unfortunately, that's not the truth. The law says that the retirement companies only have to withhold the 10%. However, really the tax is 20%. Matter of fact, if you just want to remember 20%, you'll always be in good shape.
And the age.
Yeah, and the age, and the age, because the age is really 59 and a half, and I actually have a case right now where I'm proving the person was 59 and a half. So I just tell people 60, so you're safe, right? So, but really it's under 59 and a half. It's 20% plus the 10% penalty, early withdrawal penalty, which is different than the underreporting penalty, because you'll get both, really, is what you're going to end up getting. But if you're over 60 or over 59 and a half, you will just have to pay that 20%. Mind you, if you only took out the 10, which most retirement companies do to you, then you're already in trouble. So you're going to have to be paying that 10% on the tax, and then you're going to get smacked with underreporting penalty as well. And then you're going to have to come see me to try to get that waived, because you will have to file in court to get that waived. Penalty abatements, you're not going to get a penalty abatement for that. You're going to have to file in court. We're going to have to you can try to get the penalty abatement. Or if your tax record is perfect over 60 years, and God bless you if it is, right? You know, then you may get that penalty abatement. But other than that, you know, you're really going to be looking at having to file in court to get that waived.
So really what you're saying is, if you're touching your retirement account,
Yes.
An IRA, individual retirement account, you need to be very mindful that withdrawal penalties, there are a whole bunch. So one is certainly the early withdrawal penalty, which is 10%. Plus, when you are withdrawing from an individual retirement account, you need to pay 20%. So if you are under the age of 60, in your mind, you ought to be prepared to pay 30% of taxes on the money that you've withdrawn. If you're over the age of 60, in your mind, you should say about 20%. Even if your broker says, oh yeah, we've withheld 10%, no, you should be prepared to pay 20% on the withdrawals. Now, there are exemptions depending upon the reasons you withdrew. There might have been an economic hardship, medical emergencies that allow you to do early withdrawals penalty-free. But as a general rule, 30% if you're under the age of 60 touching your IRA, 20% if you're over the age of 60 touching the IRA. So that's one form of a 1099. I'm going to go back to the regular 1099 workers, because most people, if I walked around and I asked, do you get a paycheck or do you get a check when you do your work? I'd say a large number of people are W-2 employees, but there is a huge group that gets nothing but like a big check every now and again. There is no regularity to it. And even if there is a regularity to it, is primarily because the employer is taking advantage of that employee by issuing them a 1099, right? So, I mean, say for DCRAC, we could save plenty of money, 7.65%, if we treated every single employee as a 1099. Then the employee is stuck with its self-employment tax. So that could be one of the reasons an employer, and a small employer, not large ones, might do. But if I am one of those workers, what is it that I should be prepared for? Because I always say anyone who is filing a tax should be prepared to be audited, particularly when you're a little guy. So I am a little guy, right? So IRS is going to come heavy down on me. So of course, for me, I have you by my side. But what can I do proactively to be prepared?
The first thing that I always see, and the first thing the bank, I'm sorry, the first thing the IRS is always going to look at is going to be your bank statements. So most people commingle, unfortunately. They don't have the EIN, and even if they have the EIN, they don't know how to keep the business from personal separate. They don't understand what's an expense and what's not, because the code is very general in that, and very vague, and there's a lot of case law that kind of specifies it. Unless you're an attorney, you're not going to really understand that until it's too late. So the bank accounts would be the first thing, because when you are audited, if you lose that audit, basically the way it's going to play out for you is all your deposits for that year are going to turn into income. So for example, if you say you have a personal and you have a business account, and you're moving money from your personal to your business account to help supplement your business, right? Like money that you didn't earn, it's your money. You're going to get taxed on that if you lose that audit. Yes, because they're going to consider that income, because there's no way to prove that unless it's done like through checks and very specific on the check. If you try to do a cash to cash, you're going to find yourself in trouble very quickly. So moving on from the bank statements, another issue that I always see is the receipts. I've had trials where like ink is evaporating as we're like literally trying the case. Right. So because it's always going to be most likely 3 years after you got that receipt. So if you are a business owner, you should have a computer, you should have a scanner, you should have some sort of cloud, whether it's email, depending on what sort of business you have, and you should always at max go quarterly. If you're going more than quarterly, you're asking for trouble. If you can do monthly, if you're that methodical, that would be best. But label the file by year, month, quarter, some way so that when you need to go back and look for it, you have that receipt. Doesn't matter if the computer crashes. We have clients that try to bring in these affidavits after the fact. We had one now, or recently, where a client tried to bring in, and I've had it in the past as well, where they try to bring in these self-authenticating, affidavits saying, I earned this much money, such and such. That doesn't work. It has to be from a third party. It's really to hold credibility when you get to trial. There's the judge under the, oh wow, that case just went blank. I'll think of it later. I'm not going to struggle. But there is a case out there that says, you can have certain things that a judge will let go as just being assumed. For example, however, I want to say it's the Cohen case, but I could be wrong. But anyway, long story short, the guy was a carriage. He was like an old-time actor, right? And he would get to the city, and there was hotel receipts, this, that, and the other thing. But to get to the theater, he would have to take a carriage. And back then, they didn't have like receipt, like they didn't have ATM machine, they didn't have Uber. So the IRS disallowed his carriage expenses as a business expense, and the U.S. Supreme Court finally said, no, he had to get from A to B. It's common sense, so therefore that will let go. So if you have certain receipts, sometimes you can kind of connect the dots. So, but you don't want to rely on that connection.
So Anthony, you said so much. Let me try and unpack it bit by bit by bit. So first thing is, Anthony mentioned EIN, Employer Identification Number. So there is a distinction between a social security number, that is my social security number, me. And then there is the EIN, Employer Identification Number. So I could conceivably be a 1099 employee or contractor using my social security number, or I could set up a EIN, and that's an easy process. So that was one. Know whether you're using a social security or an EIN number. Second thing Anthony said is do not commingle. What is commingling? If you are a small scale contractor doing things maybe like the camera person here. So you're getting paid every now and again, but life continues to happen, and you're moving money from your personal checking account into your business checking account, or paying your personal with your business. So, or you just have one account. When you have that income that comes in, money that comes into your account is treated as income, and you have to prove that it isn't an income, it's a loan, it's an advance. Expenses that you've paid, you've got to prove that they are business expenses. So to save yourself agony, the first thing that you should begin thinking of is making sure you have one account that is for your business, you have one account that is for your person. And when you're moving money, write a check, say from your personal account to your business account, and in the memo put loan or advance or something like that, so that that is not an income because you're going to pay it back. The other thing Anthony mentioned was invest in a good scanner. You are going to be audited, if at all, more than 3 years after you filed your returns. And if you've kept those receipts, chances are when you open that envelope, the receipt has already got, blanked. And if that's the case, IRS is going to look at that paper and say, the only thing I can see is Staples, the only thing I can see is BJ's, but I can't see anything else. So invest in a scanner. Also, Anthony said, start scanning and coming up with a naming system that makes sense. So for 2019, you can do 2019 period quarter 1, that would be January, February, March period, and it could be office expense, it could be mileage, it could be gasoline, it could be, things. So you are able to, and you said also put all of that in the cloud. So if you're audited, you could just send those files to the IRS, and before it's all said and done, you might get all right, thank you very much, exam is done,
Yeah.
right?
Yes. Yeah, the less work they have to do, the more likely you will succeed in your audit. Yes.
So now if my business requires me to travel a lot, what kind of mileage records should I keep?
With mileage, it's they want to see something very authentic, which would be preferably like a little notebook, handwritten. However, for bigger planned trips, obviously calendars will come into play. You can also have spreadsheets as well. Easy Pass is a very popular one. I know I use my calendar, I use Easy Pass, I use the mileage notes, the logbook as well. However, and also too, I actually have 2 mileage logs. I have one for work, and I also have one for volunteer hours because that's a different rate. And you just really want to keep everything in. The notebook probably should be in the car. You should probably, check, January 1st, they're going to be looking for what the mileage was then when the year started. Then you definitely want to check, quarterly as well, just so that when you're reconciling your numbers at the end of the year, it's because mileage is the best route. If you're doing cash receipts, you're going to find yourself in trouble because, for one, that ink expires very quickly or evaporates. Also, not to mention, it could be for personal business. How are you going to prove that to them? And that's what you have to always think of, the end game. Standing in Philadelphia in front of, the tax court judge, whether it's small or regular calendar, and really explaining to them, Your Honor, here's what my intent was, and really the IRS counsel, because there's a law that says you have the duty to keep the receipt, and counsel's just going to recite that, and then you're just going to be out of luck.
So again, very simple. Have a notebook in your car, and you need to make sure at least on January 1, write down the odometer reading. At least on January 1, write down the odometer reading. And then have dates, miles traveled, work, or personal. So make sure at least those columns are there. So that way you can at the end of the year look through that notebook and say, these many miles I traveled that were work related, these are the days, and there again get into a habit of scanning that notebook, because even a notebook, the ink dries. So IRS, or rather if you're doing a small business, if you're a subcontractor, a contractor, just presume that you are guilty. IRS is going to come after you. Chances are that they will. And usually we've experienced so many small businesses where IRS was perfectly happy saying, yep, you earned all this income by running your business, but they were equally quick to disallow every expense and said, all right, because you've earned so much income, you have to pay so much in taxes. So exam and audit can be very hectic, very harrowing. And it's important to know that you need to prove that what your numbers are correct. And what can you prove on contemporaneous logs and receipts. On the receipts, I know, for example, Anthony, you keep receipts when you buy things for the clinic, and as soon as you get the receipt, you write over there, this is what I bought. So there are more detailed in there. This was for this particular outreach event. This was for, you know.
Yes, especially for the outreach events, because for the outreach events we give gifts like to get people to the table.
Right.
And like when you go to different outreach events, if you've ever been to one, especially locally here in Wilmington, to get someone to come to the table to talk to you so you can tell them about your outreach, you have to have like the Slinky. I remember the one summer we had the rainbow Slinkies were very popular.
Yeah.
And you know, when you order like 200 of them, you know, it should be obvious that that's for some sort of advertisement or business expense, but nonetheless, the Slinky is a toy.
Right.
And who knows, maybe I'm just, you know, buying 200 Slinkies just to give the presents. I mean, you know, that's the other side of the coin there. So, you know, we write on there, you know, what exactly it was for. And when you're doing that at that particular time, you know, there's exceptions and evidence and rules and stuff that, you know, we don't have to get in here, but just the judges see that down the road as, okay, that's what that was for.
Yeah. Plus you also create that this is the way I do my business.
Yes, correct.
As soon as you can go back 10 years, the day I would get that, I would write it down, and that is my practice. So we have addressed that for a self-employed, small business, subcontractor, contractor, or one that does not get a W-2 at the end of the calendar year, there are additional burdens, trips, tricks, traps that you could fall into, and ways to prevent from getting caught into this net where you are in the, you know, headlights of IRS, and they are picking you up, and it is scary.
It's very scary, and that's what drives a lot of the scams is the fear that you know. So
scams. Scams? We are seeing quite a lot of those now.
Yes.
So, some of the recent ones.
The most prevalent one that comes to mind is as Delaware's low-income tax attorney, we had to do the calendar call, right? So in October, you know, I'll go up to Philadelphia, and whoever's unrepresented, I'll represent them that day. And I picked up a gentleman at a calendar call one time. He got assigned to me, and he's what is deemed a quote-unquote tax protester. So that is an individual who believes that the 16th Amendment wasn't ratified properly, therefore they don't have to pay taxes. And then when they go to court and they start saying that, they earn themselves an extra $2,000 fine, right? So, and their attorney, if you know, has to really bring them in line. So, you know, I took this gentleman out in the hallway and had a conversation with him, got him in front of the judge. Once, you know, the judge forgave him for, you know, that
Tax
you know,
protest.
that tax protest,
Yes.
we got down to the nuts and bolts of his case. Come to find out, we were able to get it dismissed, and it resolved. Let's say it resolved there. There was a minor assessment that we were able to get taken care of through like a non-collectible status sort of situation after the fact, given his income level. But with that being said, this individual, you know, who was a, you know, tax protester, alleged tax protester, not even 3 weeks later gets a phone call, right after having his case dismissed in court, gets a phone call from one of these individuals and gives him like $6,000 in Walmart gift cards. Now, to my taxpayer's defense, he did say, hey, you know, I have an attorney, you know, don't worry, he's going to take care of it. But the guy fired back on the phone, hey, don't worry, your attorney's not going to get back to me by 5 o'clock, so therefore we'll send the cops out there. And, you know, and they emailed him an arrest warrant, and he just, you know, he just folded. You know, they'd scared him to death. I mean, he was taking care of his elderly father. You know, he was worried about who was going to take care of him when he was taken away to jail, this, that, and the other thing. So, you know, if they can break him, they can break anyone. I can assure you that, because trust me, this gentleman was all gun-ho about not paying a dime, and then next thing you know, he just gives $6 grand right over the phone to someone he never saw before. So just please don't. The IRS is never going to call you. They send letters, and they don't accept Walmart gift cards either. And Walmart, and that was one of our changes. I don't know if you remember, we went down to DC, and I had told them that part of the grant, we have to go down to DC and talk to the IRS in December. And I told them at Walmart they need to put a sticker up. Now, they said they would, and they did. If you go to Walmart and you go to customer service, they'll have the little sticker about the gift cards. I was hoping it was going to be a little bit bigger. It's like literally like taped right on the registers, about that big, but they don't have the Walmart, the IRS does not take Walmart gift cards. All right.
So the scams, really, if you got that threatening phone call saying there is a warrant for your arrest because you have not paid the IRS, rest assured that IRS communicates with you by the mail. I've said in the past, IRS single-handedly wants to keep USPS alive, so they will send you mail. But if you do get that call and you really are scared and don't know whether you should pay that money, you know, before you say, okay, I'll pay that money, can you just hang up and call Anthony? Anthony, how can somebody reach you?
I give my cell phone out. It's actually on tax court notices, depending on the severity of the notice. It comes with the notice of deficiency. It also comes in the stuffer notice from the tax court as well. My cell phone number, it's 302-690-5000. Once again, that's 302-690-5000. And the fast way to get a hold of me these days is actually through text messaging. If you feel comfortable passing on your cell phone number along as well. I respond to texts a lot quicker than voicemails, because with the text, I can read it right away, know it's a tax issue. Since I give my cell phone number out to everyone, I kind of have to screen the call, so when the unidentified number comes through, especially if I'm in court or working with a client, sometimes I got to send that right to voicemail and then get back to you later on. So with a text message, it could be a lot quicker, especially if you have a fraudster on the phone, because you could be texting them, you could be texting me while you're on the phone with them.
Yeah. And by the way, those fraudsters don't know who they are calling. They've left me 100 messages. Every year I get those messages and go home. My husband says, plays it. I said, ignore, ignore, ignore. Let them take me too. You know, I got Anthony out here who'll bail me out if I'm dragged in court. So, we were talking about scams. We were talking about other scams that are happening right now. In fact, you're working with two,
yeah. So,
right?
it's a little disturbing because they both came in within 30 days and they both were for high dollar amounts. One was referred over to us from the Delaware Department of Justice. The other one was referred over from the Newcastle County Police Department. Both were older women. Both had been taken advantage of. The first woman, she was in her 70s. It was a home improvement scam. The guy took her for about $400,000 over 2 years. The tax consequence obviously is going to be that money came from some inheritance, which she had then rolled over into some retirement sort of money, and then she withdrew that and had to pay the tax penalties on all that. So that's how it came to my office. Then the next one was another older woman as well. Her and I haven't actually met yet. Just her and I have just spoken over the phone multiple times and done some stuff that way, and we'll be meeting very shortly. But with her, this one was even tougher. The balance wasn't high. It was about $200,000, but nonetheless, she had earned that money, worked her whole life for it. Has a daughter in college right now. She actually has to go back to work. I told her, don't worry about it. You know, she still qualifies under the income requirements from when she called. And basically, she had received an email from an individual. They call those romance scams. And basically, the guy was able to get $200,000 from her, obviously, which she withdrew from the retirement, which then cost the tax penalty. So both of those cases came my way. My job, obviously, in those cases is to help with the tax penalty, because since they were quote-unquote Ponzi schemes, there's an exception to help with the penalty abatement for those. And we've done that successfully in the past for another individual before. So, and the IRS, you just kind of have to prove that they were schemed, and that's really the tough part. The fact that this time we have the Department of Justice and the County Police on our side, where the other time we didn't. It should be a lot smoother ride.
Right.
But you know, they are cases that, you know, you would think how does that happen? But it does happen, and both these women were very, very smart, you know, and very intelligent, and basically, you know, just the right fraudster in the right ear at the right time, and just you just never know, you know, you just never know. So just please be careful. And listen to your family members, because, you know, in this, I think there was some family members that were telling them one thing, and just really listen to your family members sometimes rather than your heart, because your heart could possibly deceive you in that situation.
Yeah, and it's a very good piece of advice. Two heads are always better than one. And your gut, give everything a gut check. Your gut is telling you, this can't be right. This is too good to be true. And whenever you have the tiniest of the doubts in your mind, step back. If anyone is kind of cornering you into now or never, settle for never, because it's your money. You don't want to lose it, because once you've lost it, it's going to be very hard, if at all, to get it back. And we've seen a lot of losses. People have lost so much, and we leave no stone unturned. But that doesn't mean we can make our clients whole again. And with the home improvement fraud, 30 years ago when I started in the CRA work, the biggest fraud in our neighborhoods used to be home improvement fraud. These fraudsters, these contractors would come by and say, well, we just fixed this lady's home. We can fix yours. We'll give you a great deal. The homeowner would say, sorry, I know my credit is bad. There's no way I can borrow money to pay you. And the contractor would say, don't worry, I have a bank lined up to pay, to, you know, qualify you. And they would get their loan, so owe money to the bank, and not a dime's worth of work done by the contractor. So yes, the contractor was caught and put behind bars, but you, the homeowner, borrowed money. You still had to pay, and if you didn't, they took your home. So that scam has always been there. Another, just, you know, rule of thumb. there are two transactions happening when you are buying a car, buying a home, getting work done. So you're getting all of that done by one entity, buying a car from one dealer, buying a home from a seller. But because you don't have the money, you're shopping for a lender who will lend you money. Make sure they are two distinct ones. Shop around for money separate from contract, car, and home. Sometimes, yep, you can get a pretty darn good deal by your auto lender or your, auto lender, but not always. So keep these two absolutely separate from each other. So Anthony, tax time, why should I be worried about it today? It's only October 7th.
Well, we're in the fourth quarter, so
Yeah.
depending on what how many estimated tax payments you have made, you know, you may have been robbing Paul to pay Peter, so you just need to make sure that you get caught up on that. Obviously, also too, if you do make estimated tax payments throughout the year, I always recommend that you file the extension because you most likely at that point should be covered if you've been doing this for a while. Like if it's your first year, I wouldn't recommend that, but if you've been doing it methodically and you know that you're going to be fine, then when you file that extension, you know, you can always obviously use your wage and income transcript as a better guide to avoid being audited as well.
So you mentioned wage and income transcript. So I am the taxpayer. How do I get my wage and income transcript, and what is it?
The wage and income transcript is basically what the IRS knows about. So what happens is they're not released until after tax season. Obviously, you know, they have a reason. You know, their reason is, you know, they want to make sure it's quote unquote complete. But this is, let's be honest, this is a voluntary tax system, so they also want to see how voluntary you're going to be as well. So, but as long as you make your estimated tax payments, you're fine. So you basically would, you know, make your estimated tax payments throughout the year. Make sure you file the extension before April 15th. Right around June, July-ish is when it comes out, right around the 6-month mark. And then you would pull your wage and income transcript. It'll tell you everything the IRS knows about. And then obviously you just kind of match that up with your books, and then you just turn that in. So that way it helps you, and you make sure you don't forget anything, like the small little, maybe like the state refund, or maybe you did hit the lottery one night, you know, when you were, or not hit the lottery, but hit at the casino one night when you were drinking and might not remember, and just kind of follow all those little things along. And make sure all those little things are in there, and you'll be fine. And it's also good to know too, because when you see the wage and income transcript too, it'll also help you as well as far as, you know, knowing that, you know, I'm sorry, there's other things that come that spawn off the wage and income transcript as well. The government also has the you have an online account you can set up through irs.gov. That's where you would get the wage and income transcript, but it can also show your account transcript, or your record of account, which would be your account transcript and your tax transcript combined, but your old tax transcripts can be on there as well. So you can kind of also pace it and kind of use it as a guide too, because when you pull your wage and income transcript off, it's very important because IRS only holds on to it for so long. So say you're audited down the road and it's missing, like, and they don't have record of that stuff anymore, you can find yourself in trouble as well, because like they could be trying to come after you for something for whatever reason, and then you can say, well, look, you have here's what, you know, I got from your website, here's what I got from you. How can you say I made this when you don't even have any record of it yourself? You follow me? So it's just a nice piece of evidence to have, and it's free, and it's always been there. I didn't know about it obviously until I got recruited for this job. I use it in my family law practice. I use it all the time now. Like I use it in education to other attorneys. You know, what does the wage and income transcript say, especially when it comes to like child support and other things, like here's my income, here's what the government knows about, here it is, it's public information. Private in the sense that it's public to you, like you have access to it, and then if you want to share with the public afterwards, that's your business.
So Anthony gave some amazing tips today. If you are a self-employed, small business, subcontractor, contractor, somebody who's touched the your IRA account, what are some of the consequences of it all? And very important last bit is set up an account for yourself at irs.gov. Look at your wage and income transcript, download it, save it. It could conceivably save a lot of agony moving forward. So it's something that you can set up. And by the way, IRS knows everything.
Yes, they do.
How? Because they pull information from everywhere. So today, Anthony, we talked about Tax Clinic and only about Tax Clinic, but we at DCRAC offer a whole bunch of other services as well. So instead of me talking about them, we have 3 minutes. Can you talk about the other services?
The other services would be the housing, credit, and the housing kind of breaks into multiple facets, which would be, and also there's the credit union as well. So I probably interact the most with housing because if there's housing issues, there's most of the time tax issues as well, or vice versa. So Lillian and I interact and share clients constantly. With that being said, just because Lillian may have some of your paperwork doesn't mean I have that. So please, if you make an appointment with, if you're already Lillian's client and you're calling me, please have the copy of the paperwork as well, and vice versa. We don't, it's confidential between the clinics. And then also with the credit clinic, for example, for cancellation of debt, Joe and I work very closely together because he'll pull the credit report. I'll go through in order to prove, one of the exceptions to cancellation of debt to avoid that being an income is to prove you're insolvent. And Joe and I work together to get that done. Also, sometimes Joe will be able to negotiate on your behalf for creditors that are being a little bit, unfair. And if Joe gets stuck, then I'll jump on the phone and resolve that for him on occasion.
And then Maricela helps with all.
Yeah, Maricela is kind of the jack of all trades. She helps with everything. She does all the translations. She does a lot of the evidence collection. Like in the past 3 years, she can, to be honest with you, she's even been to court with me once or twice. She could probably try, if she was a member of the bar, she could probably try one of these cases on her own.
Yes.
Same with Christian as well. Christian works with me downstate, Maricela upstate, and Jacqueline works with me as well. She, her and I worked a little on the title project together when I first got started, and we also work on a little of the housing nuances. I always defer to Jacqueline when it comes to housing because although I practice different areas of law, like housing, I'm out of bounds. I always defer to Jacqueline and you as well when it comes to any housing.
So Anthony, thank you so much. And guys, if you have an IRS issue, you've now met your free tax attorney. 302-690-5000 is a cell phone number. Text him your tax questions. Best way to reach him. I'll see you next month.
Thank you.
I'm Jacqueline Quinn, Deputy Director at DCRAC. I'm here to help you with your housing, tax, or title problem. So give me a call anytime, and I'm happy to meet